Welcome to Winning Wall Street's Money. Please take this moment now with helping me. Click here, subscribe. Next, click this bell. Next, ensure to click all. This helps you receive a notification when I posted my next videos. Next, click this thumbs up button after every time you watch my video. This pushes it up in the engagement ratings and means it will be suggested to more people, therefore is likely to get more views to my YouTube channel. I really appreciate that. I also have a Patreon page. Click show more. Scroll down. This link here, my Patreon, click on it. Select the membership. With this membership, you'll get access to all this information. Very good content. It's Thursday, April 1st, 1:54 p.m. New York time. Since it's the first day of the new month, we'll look at the prior monthly charts. That means each candle is a monthly period. So this prior candle here is the whole trading month of March. First, we'll look at the 30-year yields. As the United States Central Bank, the Federal Reserve, determines the interest rates, and the interest rates affect the value of the US dollar. That means if you raise interest rates, typically that strengthens the US dollar, and inverse, if you lower interest rates, it weakens the US dollar. Also, when the rates go higher, the yields go higher. That has the inverse effect with treasuries. So, example, the 30-year bonds, they'll go down in value when these treasuries are going up. That's a trade idea. And my trade idea is watching the bounce on the 30-year treasury for the opportunity to reload, to trade bearish and make money on the decline. Right now, that hasn't happened yet, so I'm sitting on the sidelines and waiting for it to happen. So again, for the month of March, we made a higher high, higher low. Let's look at the US dollar index. US dollar index as well made a higher high, higher low. Huge trading range right inside the midpoint of this consolidation area. So it didn't close above it, it stopped in it. Potential reversal for next month. Watching it closely for that setup for entry. Let's look at the cryptocurrency, most popular Bitcoin. For the month of March, higher high, higher low. Strong like bull for the month, for the year. See this huge move up in the US dollar? Yeah. And also see the huge move down in the US dollar on this period. It will happen here sometime on this cryptocurrency pair. Digital coin. Yep. So the US dollar index is comprised of several currencies. The three heavily weighted currencies in the US dollar index, the first is the euro, second is the Japanese yen, and the third is the British pound. Yep. The euro makes up the largest percentage of the US dollar index. On top of that, you have three safe haven currencies: US dollar, Japanese yen, and Swiss franc. As we go through these charts, notice where the leadership is. So you see for year to date, the first month of this year, second month and third month, the strength, the momentum has been upside, leadership. Watch when we come into, again, the yen and the Swiss franc, see what they're doing. So the flight of safety right now is into the US dollar. Let's look at the first currency in the US dollar, the largest, the euro. Wow, for the month of March, lower low, lower high, momentum's down, it's bearish. Back inside this balance area. And it had a bigger trading range than the prior month, and the prior month of that. The momentum is down. We'll see if that continues or if we start doing building a consolidation like this. Second largest currency is the Japanese yen. Huge move down for the prior month. Yep, back inside this consolidation area. So we see since year to date, it's been trending lower. Institutions are not investing in the yen. The British pound. Yep. For the month of March, inside candle. That means that yellow candle means the high and low do not go above or below the prior month, but it's a solid body. A solid body is the same as red. So it trade bearish for that month. But again, because it's inside the prior range, means indecision, like neutral. So the bigger picture is here, it's in a consolidation phase, and the prior trend has been up, so the probability is to continue going higher. And it's gaining strength a lot faster since UK left the EU. That was shared last year multiple times. I mentioned that to be long the pound and short the euro until change occurs. Canadian dollar, strong like bull. Yeah, gaining strength against the US dollar. Last month, higher high, higher low. Also made an all-time new high for the year last month. Very good. So it's trading higher than last year and the prior year, coming up to the high of 2018. Swiss franc, the third safe haven currency I mentioned. Just like the Japanese yen, the momentum has been down. Huge sell-off last month. So again, the safe havens, those two, that's not where the institutional money is going to. It's going into the US dollar, and the US dollar is getting stronger, and the yields bringing the interest rates higher. The Federal Reserve will step in at some time. Yeah, and not going to get that dollar continue going higher. Why? Because strong dollar makes our exports very expensive to other nations, and that could slow down our economy. So be prepared. But again, doesn't mean these currencies, the Swiss franc or the yen, are going to go higher. It might be strength into other currencies while these still decline. Australian dollar, lower low, lower high than last month. See this red candle? Yep. That was a pin bar the second month of the year, February. That's a bearish pin bar. So it's in a consolidation here. Even though the trading range is getting tighter and tighter and tighter, that's going to build a coil, and that coil will break out at some point. When it breaks out, it may have a trend continue up or down. Time will tell. Again, take notice of the US dollar. Where is it right now? On this monthly time frame, it's here. I mentioned that as the supply area where sellers might be. So which other currencies would come leadership if that doesn't continue? What is so with the Australian dollar? It's more weighted to commodities, the energy commodities like crude oil or coal, natural gas, but very much probably to coal, and also metals, gold. Same to the New Zealand dollar and the Canadian dollar. Let's look at the Canadian dollar again. Here's the Canadian dollar. Their currency is heavily weighted with commodities. Exporting those commodities, Australia, New Zealand, Canada, where the US dollar and the US economy is very heavily weighted toward technology. So we'll see how this momentum continues. These currencies coming very soon. Where are we looking at Bitcoin? What is it other than a digital coin? What's it have a correlation to? Not much, not much. Then fear and greed, just like many other financial instruments, fear and greed. Yep. So the wise trade is stay abreast first, correlation of the US dollar with the yields. So when these yields start building a consolidation phase, you may see a decline in the US dollar, or if the yields start rolling lower, you might see that faster decline in the US dollar. If that happens, expect to see the Australian dollar, Canadian dollar, likelihood go up faster. And all currencies are, all commodities are priced in the US dollar. So gold, crude oil, natural gas, silver, copper. Yep. They go very high, even faster as the US dollar declines. Huge correlation between the US dollar and commodities. And as I mentioned, these nations that have a correlation to commodities.